We may have some danger ahead of us as Apple has earnings this week, and there's no other stock in the market that moves it like Apple. Let's take a look at Apple, and then we'll look at the rest of our YM holdings. This is my tactical stock scalper. All right. So Apple has earnings this week, and that could be a problem, right? If Apple's earnings are bad. Now, look, right now people are coming out, all of the folks that talk about earnings and this and that, and they're saying Apple is going to have a down earnings. Okay, well, what does that look like and what does that mean for us? Well, if they do indeed have bad earnings, the first level we really need to be watching is a $160 level. Not only do we have the 100 period moving average on a weekly time frame, you see this little red wavy line right there is coming up to 160. Also, I drew the straight red line across the 160 price tag, and I wanted to show you how important it's been through time. Look, we got up to 160 right there, got rejected. It's come back down, used 160 as support, and went above it. And then it's kind of, if we get below 160, we stay there for a bit. If we stay above 160, we tend to gravitate up higher. Let's look at Apple on a daily time frame, get a closer look. So if we look at Apple here, it is now below its 200 period moving average on a daily time frame. All EMAs are curling down, a lot of downward pressure on Apple and the market in general. There's this 160 level I showed you. If we take a little closer look, you can kind of see the past year where we've hit it and got rejected. And then once we got above it, it came back right there, tested it, and then it held support and then rocketed up since then, and has stayed along the 20 period moving average, the white line, for all this time and really respected that 20 period moving average. Those would have been great times to buy Apple. As it came down and hit the 20, you buy there and just let it run. But as we see here, it has since sold off and went down, and we are nearing this level again. So 160 is going to be the first level I'm looking for in Apple, and see what that does to the market if it goes down. Let's take a look at SPY. So if we look at SPY, again, it continues to drop. It got below this 420 level like we talked about, and how important that level was, much like the 160 level for Apple. With 420 breaking, we knew 410 was on deck, and here we are. This could be a point in the market for major support, but we'll have to see what happens with Apple. Let's look at SPY on the weekly time frame. Let's go out to 5 years. Okay, as we see, SPY just looks beautiful. It's in a great bullish run. There we had a little break with the COVID crash, and then we had last year's downtime. But as you see, when it gets to this 200 period moving average, which is the purple line on the weekly time frame, it tends to bounce or recover really hard from that point on. And we are nearing that. So if Apple flushes the market and gets a bad earnings, and Apple breaks through 160, we're certainly looking like it's a possibility we could test that 200 period moving average on a weekly time frame again. And to a lot of people, that's going to freak them out once it starts dumping and gets to that level, if it does, right? I'm not saying it will. I'm just trying to be forward thinking and be proactive here. So I would just caution you about buying too much this week. Jay Powell also speaks this week, which he could actually raise the market, and Apple could come back the next day and just absolutely crush it back down. Let's look at the VIX and see what it's been doing and see if it can give us any clues as to what may happen. So we're going to pull up the VIX here on a weekly time frame. The VIX this week is again shot up for about the third week in a row. That's not good. We don't want to see the VIX on a weekly time frame above the 200 period moving average. That means the VIX is bullish, which means the market is bearish, which means the market has potential to go down even further. We're having this, all EMAs are starting to curl up. Look how fast the 20 EMA is now starting to curl up. Let's look at the VIX on a daily time frame. So if we look at the VIX on a daily time frame, it is now starting to get a bullish formation, right? Once we get all these EMAs above the 200, that means the VIX will most likely go higher, which means the market will go lower. We did have a high up here of 23, okay? Even though the market's been down, the VIX hasn't got to that level yet. Again, on the daily time frame, we'll have to see what happens. That could, not saying it is, that could signify that the market is bottoming right now. And it's just something I'm looking at, because as the market went down, the VIX could not get above the $23 mark, which leads you to think that maybe that was the top in the VIX, therefore being the bottom in the market. We'll just have to see. Let's look at QQQ. QQQ, as we talked about, is right here messing around. Let's zoom out here just a bit. So as you see here, we're around the 200 period moving average on the daily time frame. The Qs are still bullish until the 200 is totally breached, close below. Now, even though all EMAs are curling down on the daily time frame, let's look at the weekly to get a much better picture. As we see here, I averaged down on my QQQY position because we are nearing this level of 340, which is, we have the 50 period moving average in green, which should give us possibly some support. Could be a bounce from here, right? Could be just an overall turnaround in the market, or it could just honestly shoot right through it. But I think this is a great level to average down on QQQY because we are coming to an area of support with the 200 period moving average in a daily time frame, and now touching the 50 period moving average on the weekly. There's a couple other things I want to talk to you about. Let's look at Tesla. We're going to skip Tesla for this one. We're going to go ahead and look at just Tesla. If we look at the weekly time frame, Tesla does not look good, right? It's in a bearish formation. Everything is below the 200 EMAs. All the EMAs are spread apart. They continue to curl down at a rapid rate. That doesn't mean that Tesla cannot recover. It's just saying for the current time, Tesla is in a really bearish formation. Let's look at it on a daily. Tesla is trying to find support here, meaning Tesla is trying to find some support here around this level. We will see what happens here. It's possible that a bottom is in here on Tesla and Tesla, and we could start going up to test some of these moving averages. Let's look at Tesla. Let the old man pull it up here. Come on, fingers. There we go. There's this line that we've been talking about for quite some time on Tesla, how crucial this 200 to 210 level is on Tesla. We really haven't breached it. We have that wick below right there in the green. That's where I averaged down on my TSLY position. We were looking for a bounce. We did get that bounce. However, it was weak, feeble, and came back down. And here we are at this level again. Again, this 210 to 200 level is really important for Tesla, and it's important that it holds it. Now, I want to show you something else. If it does break this level, you see this little arrow I drew here? I put this in one of the Discord servers I'm a part of. That's the spot I'm looking to average down on TSLY again if it breaks the 200 level. I want to look for this 200 period moving average on Tesla. Now, that doesn't mean it won't break that 200 like it did here, right? And let's look a little deeper on Tesla. Let's go out 5 years. Every time, like most things, right, in the market, if it gets to the 200 period moving average in a weekly time frame, we start getting bounces. We can start looking for bottoms, right? And we are nearing that point now. So that's why I am going to wait to see what happens with the market this week. And if we get to this 200 period moving average on the weekly time frame, that's where I will average in again on TSLY. I think it's a good spot. Now, the only thing concerning about Tesla is what? Lower highs and lower lows continually. So we need to break out of this trend for Tesla to really start ripping and Tesla to start ripping up. But my friends, if you're an investor and you're a long-term holder, these are times that you can make a lot of money. We're not panicking here. We're taking our time, averaging down, and getting some shares for the eventual run back up. Hope you liked the content. If you did, please subscribe to the channel. I would truly appreciate you. This is Mike, Tactical Stock Scalper, out.